Hey friends, if you've been waiting for more homes to choose from, this update right here is what you've wanted all year long. Inventory in King County just jumped once again, and buyers finally have real room to negotiate, and prices are still holding near all-time highs. I'm gonna walk you through all of this, exactly what happened in July, and what it means for you. Stay tuned. I'm Brennan with Emerald Group at Real, and every month I break down the King County numbers in a plain way, plain language, so you can make smart decisions about your home purchase or your home sale. There's no hype here, no scare tactics. It's really just the real picture. If that's helpful, do me a favor and hit subscribe right now so these land in your feed each month, and let's get into it. Okay, so here is July at a glance. The median sales price came in at $879,500. That's down about 1.5% from a year ago. So it's essentially flat, down a little, and still right near the top of the range we have ever seen in King County. Now, in terms of active listings, we hit 7,836. That's up roughly 24% from last July in 2025. And so this is the story of the month. This is the most choice buyers have had in many years. New listings came in at 4,124, up about 16%. So sellers are still coming to the market in good numbers. Pending sales were at 2,168. That's down about 13.5%. And closed sales were 1,992, down about 10%. So more homes are available and buyers are definitely taking their time. That's what we see in the market. And months of inventory sit right at 3.93. Balanced in our market is considered 4 to 6 months of inventory. So we're right at the doorstep of a balanced market, just slightly under, and hold that number because it explains everything else that I'm going to tell you about July. So the inventory story. Let us start with inventory because it's the biggest shift we're seeing in the market. Almost 7,836 active listings is a big jump from a year ago. For most of the last few years, buyers were fighting over a tiny handful of homes that hit the market. And so that pressure is finally easing for buyers. When you have more listings sitting on the market, a few things will happen. Buyers get to actually shop instead of panicking and going after whatever they see. They can see a place twice, sleep on it, and write an offer with terms that actually protect them. And sellers who used to name their price now really have to earn it from a buyer. This doesn't mean the market is falling apart. It means that the market is really normalizing. And I've talked about this before in months past. We're moving from a market that heavily favored sellers towards one that is a lot more even on both the buy side and the sell side. And that is healthy. And honestly, it's a relief for a lot of buyers who had given up in the past. Now, the question everyone asks, if there are more homes, are prices dropping? And that's a good question, but the short answer is not really. The median held at $879,500. That's down about 1.5% from last year. So it is coming down a little bit, but in the big picture, that's sort of just a rounding error. Prices are holding near those all-time highs, even with the inventory going up. Here's why that matters. A lot of people hear more inventory and they assume a crash is coming. That's not what the data shows. Well-priced homes that show well to buyers are still getting offers. They're still moving through the market. What has changed is that overpriced homes are sitting, and they're sitting a lot longer. The market is rewarding sellers who price right in this market, and it's definitely punishing the sellers who are not pricing right. Supply and demand balance. Let us tie it together with that months of inventory number, which was 3.93. That tells us how long it would take to sell every single home that's already listed on the market at the current pace if we brought no other homes to the market. Under 4 months usually is favorable to a seller. 4 to 6 months is balance, so balance between buyers and sellers. And above 6 months of inventory starts to favor buyers. So when we're at 3.93, we're basically standing at the line between a seller's market and a balanced one. Pending and closed sales slowing down while listings climb is exactly how you would expect this shift to look like. Demand is still there. It is just a more patient demand. So if you're a buyer, you finally have leverage that you have not had in a really long time. And if you're a seller, you can still win. You just have to be sharp about price and presentation. And if you bought within the past 10 years and you're trying to resell, that might mean that you're not making a humongous profit. So keep that in mind when you list your home and when you price it. Here's a quick word on rates. The 30-year fixed is sitting around 6.66% right now. It ticked up a little bit, so it's worth paying attention to, but it has been living in this range of the mid sixes for a while. So here's my honest take. Do not try to time the rates to the decimal. If the payment works for your life, and if you find the right home, the smart move is to buy the home and manage the rate. You can always refinance a rate if that ends up coming down, but you can't go back and buy a house at last month's price. Line up a lender conversation early so you know your real numbers before you go out shopping. And keep in mind that a lot of buyers in this market are able to use seller credit to buy down the interest rate to make their monthly payment more manageable. So if you want to talk about that more, reach out and let's talk about that as a strategy. What this means for buyers. If you're a buyer, this is a really great window. More homes means less competition and actual room to negotiate. You can ask for repairs, you can ask for a rate buy down like I just mentioned, and you can take a beat before you actually commit to something. The frenzy of the market we were in is behind us for now. If you get your financing lined up, get clear on your must-haves and go look, you have options that you did not have a year ago, and it's worthwhile to see what that monthly payment looks like even at higher rates than they were a few years ago, because that monthly payment may surprise you and you may be able to get a house a few years ago. What this means for sellers. If you're a seller in this market, do not panic about the extra inventory. Buyers are absolutely still out there and prices are holding, but you're no longer the only house on the market. So the details matter a lot more. You do have to price it right from day one. It's really important that you get the pricing high. Every conversation I've had with a seller this year is about pricing it lower than what they were hoping for. So be realistic about that expectation. Invest in your presentation and lean into the marketing. Homes that are priced and show really well to buyers when they walk through are still moving, and sometimes they move quickly. The ones that guess high and try to price above the market are the ones that are sitting on the market. So be aware of that. So that's the King County market for July. More homes, more room to negotiate, prices holding steady, and a market that is finally finding a balanced position. If you're even thinking about a move this year, whether you're buying, selling, or just want to know what your home is worth in this market, reach out. I'm always happy to talk it through with no pressure about working together. You can find my contact info below, and I'll drop the full one-page market update in the description so you can save it and look through the numbers yourself. If this helped, I want you to hit the like and subscribe button, and I'll see you next month with the August numbers. Take care.